Good morning. For Traders Exclusive, this is George Tkaczuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. What I'd like to do is talk about the equity markets, and the equity markets actually continue to be very constructive. There's a lot of fear out there. There's a few technical problems, meaning the S&P still has not been able to get above its 3,000 level, but as I talked about last week, the selling gets less and less and less as we move from all the corrections from last December to this latest one where there's just less selling, the bases are less deep, and that's a really constructive sign. Furthermore, breadth is expanding on the NYSE. If we look at the NYSE advanced decline line, that's hitting new highs, as so as the new highs minus new lows. So that's very good. Furthermore, what we continue to see is we have Microsoft holding its $1 trillion valuation, and now we have Apple above $1 trillion. Now the importance of that is if institutions who control all the money thought that this market's going to take a downturn, they'd be selling. That'd be a huge liquidity event for them to sell into that $1 trillion valuation. However, they're not. So that's also a very good sign. Now, there's a lot of fear out there, and that's a really good contrarian signal. For instance, if we look at the American Association of Individual Investors, it's called the AAII Sentiment Survey, coming in last week, bulls were only at 21%. That's again the kind of like sentiment we see near bottoms, whereas bears were up to 39%. So it's a really good contrarian signal. Also, we had the put-to-call ratio spiked to about 1.37 on Thursday evening. Again, meaning everyone's very fearful. We're about 5% off the highs in the S&P, and everyone's freaking out. And also, if we look at the National Association of Active Investment Managers, they're only invested at about 57%. That's about mid-level, but it's not overly optimistic nor pessimistic, but it's a little bit more on the low end, meaning everyone's underinvested. So, if you take all these things together, basically, the $1 trillion valuations, negative sentiment, the corrections getting shorter and shorter as the S&P tries to make it above that 3,000 level, that's pretty much painting a bullish case. Now, we also see is a lot of the software stocks that got killed, they had a hard time. They're still building the left side of their bases, but some of those stocks are starting to come up, round up on the right side. So when you have all those things put together, as you want to be a little bit more bullish on this market, of course, watch that 3,000 level in the S&P. That's going to pretty much tell us everything, as will price and volume in your own individual stocks. So as I say, let price and volume be your guide. Take a look at the 3,000 level, see if Microsoft and Apple holds those $1 trillion valuations, and we might be good to go. So as always, let price and volume be your guide. This is George Tkaczuk, we're RCM Wealth Advisors, reporting to you from CME Group trading floor in Chicago, and have a great trading week.